But the journey from being a tea major to joining India's top FMCG companies, Tata Consumer has consistently been the hawk-eyed on market share. But even as they have achieved significant market share over the years, the company does not shy away from venturing into new products.
From tea to coffee to salt and dals, and now acing their packaged food game with the relatively new brands like Sampann and Soulful, the growth has not just been exponential but unstoppable. In our brand new edition of CEO at Work, ET Now's editor-in-chief Nikunj Dalmia spoke with the MD and CEO of Tata Consumers, none other than Sunil D'Souza. Take a look.
Hello and welcome to a brand new show of CEO at Work. On this edition of CEO at Work, well, we'll talk about a company which in a sense has really transformed itself. An individual who really is behind the transformation. We're talking about a company which was a tea company, became a beverage company, is now on course to become one of the largest food company in India. And guess what? They are just touching your life on a daily basis. From a stock market standpoint, this is a stock which has delighted and surprised everybody. But like Sunil always says, that the best is yet to come, the hard work is at play, the team and everything else is in motion. And every time when we have Sunil D'Souza on ET Now, it is chai, coffee and khane pe charcha. So nice to have you on ET Now. Thank you for joining us.
Always my pleasure, Nikunj.
We are talking about a company which has changed both the customer appeal, the shareholder appeal, and also the dynamism in terms of the brands they represent. So before we go forward, let's remind our viewers where you were versus where you are.
So Nikunj, like you rightly said, this started as a tea company and then slowly over a period of time it became a beverage company. We had ready to drink, etc., the joint venture with PepsiCo. And then I think the real transformation started in the year 2020 with the integration of the salt business and the Sampann business which came from Tata Chemicals, right? That gave us a foundation of tea and salt, if I may call it. From there, I think the big job was A, expand distribution, B, build portfolio, C, financial metrics. I think we had lost sight of the fact that ultimately we've got to deliver financial metrics. So in terms of portfolio, I would say broadly, my portfolio today is geared for growth and for margin, and I'll tell you why. So I've got, I would say, 3 businesses, the tea, salt and international, right? Which are 1,000 crore sort of businesses per quarter. These are stable margin, mid to slightly higher single-digit growth rate. And these provide the bedrock for us, but they are not the fastest growing businesses, but they give us stability. Then we have these fast growing businesses with a very high TAM, the Sampann and the ready to drink, right? Per capita pulses, lakh and 50,000 crore category, branded is not even 1%, right? Spices, 60,000 crore category, branded is 20. So huge TAM, decent margins, right? Ready to drink, penetration in India is very low. So these 2 businesses provide me the high growth of the top line. And then we've got these businesses which are fantastic margins. I would say 50% accretive to my base margins, Soulful, Capital Foods and Organic India. And these are the brands for the future as well. So we've got these 3 pieces giving me both stability, high top line growth and good margin growth. So overall, I think financially now we are set. Portfolio we diversified. Financially, we've built out distribution. Now the incremental costs of going out is not going to be significant. So the margins on the top line are going to start flowing through the bottom line.
Okay. So you've pretty much given us a big picture view in terms of where the sketch of the, what the sketch of the company is. Let's start filling in the colors now. I'll start with the recent quarterly performance, and I'm talking about Q3, even though we are about to close Q4. There was a bit of a stress, both in terms of margins and also in terms of tea business. How much of that was largely cyclical in nature?
So, Nikunj, we delivered a 13% EBITDA margin versus same quarter last year of 15.1. If I strip off the tea costs as well as the price increases that we took on tea, I would add anywhere from 100 to 150 bips back. So I would be, versus a 15.1, I would be 16.1 to 16.5. And I have maintained that a good food and beverage company in India should be between a 17 to a 20. So we're within touching distance, bar the tea ups and downs. Now tea again, I have only taken about, in the last quarter, we've taken about 40% of the costs, we've passed on 40% of the costs as prices. 60% is still there. Now tea, here's the thing, magic. Plucking has started in North India. This year crop right now looks equal to, if not better than last year, which means prices should broadly start coming down, right? As that starts coming down, middle Q1, early Q2, I think you'll suddenly see the margin shift happening in TCPL.
So tea, Mr. D'Souza, ultimately is a commodity. 2 good years, 3 bad years, 1 or 2 flat years. So last year you suffered because of high tea prices. This year you could benefit because of low tea prices. But what is the plan in place to ensure that irrespective of where tea prices are moving, 60% of your portfolio, which is still tea and beverages, is insulated? Because last quarter was good, next quarter will be better, then the same problem could come back. What will you do to protect the volatility in your numbers?
See, the good part about tea is, while you're absolutely right about the cyclicality, the good part is we've got a strong position in tea, right? We're a very strong number 2. And therefore, as a business, it's a good business. But you're absolutely right. We've got to take out the cyclicality. The way to take it out is make sure the rest of the portfolio grows, right? Salt has been a steady profit generator now, volume and profit generator. International has come back to the party. International, we always maintain, should be incremental to India. That has started happening, about 200 bips better than India. And then most importantly, all the new businesses that I talked about, Sampann, Ready to Drink, Soulful, Capital Foods, Organic India. We've guided for 30% contribution, growing at 30%. So mathematically, 9% of my growth will come only from this, and everything else is incremental. So from that perspective, it is maintaining tea, growing share slightly, but more importantly, growing the rest of the portfolio aggressively.
Okay. So if I do some basic maths here, we are looking at less than 50% contribution technically then coming from the non-tea portfolio by FY26 itself.
Oh yes, absolutely.
Because 10% new business adds up every year.
Again, in tea, I would separate it into 2 pieces. There is India tea and international tea, right? India tea would be roughly around, this year, would be about 30% of my portfolio. International is not so volatile. India is more so, because international is dependent on Kenya, Rwanda, Malawi. That's where we source our teas from. That's not as cyclical as Indian tea, right? So it's only 30% of my portfolio which is slightly cyclical.
You know, Starbucks is more about coffee, less about tea, right? My day starts with coffee in the morning. What about you?
My day starts with my first cup is coffee. Okay. Rest of the day is tea.
So there's a dark roast here, there's a medium roast here, blonde roast, that's what you call them?
Yep.
And then there is green beans. So just educate our viewers. This is how the bean comes out, right?
Yeah, so this is, once you pluck the coffee,
okay,
you take out the parchment and then you dry the coffee. This is how it is.
Okay.
Then you take out the parchment, yeah? Then this is green beans and then you start roasting it.
Okay.
The more you roast it, the more darker it gets and therefore more caffeinated.
So what does India like? The halka coffee or the strong coffee?
India more or less is the halka coffee right now. But here's the thing, Nikunj, India coffee is changing dramatically and changing fast. Globally, coffee is a growing business, tea is a flat business, and those trends are now coming to India. So whether it is out-of-home coffee or in-home coffee, is growing very, very fast. Incidentally, when I talked about my portfolio, coffee, which is part of my portfolio, coffee, I've got about 2 to 3% market share now, and it's growing at 30%.
But coffee prices are at a 50-year high. And what I understand is that tea companies or beverage companies are struggling to pass it on. While tea could be at a 4-5-year high, coffee prices are at a 50-year high.
Absolutely.
So if tea hit you last quarter, will coffee hit you this quarter?
No. So coffee, the good part is I sit on both sides of the story, right? Because I have plantations where I get the upside, but then I also have a coffee business in the US where I buy coffee, right? So I get an upside here, downside here, it normally balances off. So You're absolutely right. Coffee, because of the droughts in Vietnam and lack of rainfall in Brazil, Arabica and Robusta both have gone up in sync. And I heard a major coffee company CEO saying now we're at the point of demand destruction, right? With the prices having run up. It was what? If you dial back maybe 2 years back, it was $1.50, $1.60 Arabica per pound. Today it's touching 4, right?
It's gone through the roof, especially in Vietnam. It's actually, Robusta has also gone through the roof is what I was reading.
So what happened was Arabica went up and people started replacing it with Robusta. So Robusta went up. Now Vietnam, there is a drought, and Brazil, there is a drought. Now, so both Arabica and Robusta, both are up. So now the point, like you said, people are struggling to pass on the prices because you are starting to see the impact on volume. The consumer is now starting to push back.
Okay, where we are standing right now, just to introduce this Starbucks cafe, this is the first Starbucks Reserve cafe in India.
So this is absolutely the first Starbucks store in India.
Okay.
This is where we started from, what, 10, 12 years back. Yeah. From there, we've grown to about 475 stores, 75. We just entered Jamshedpur, right? 75 cities. And as a celebration of the 10th year, we converted this to a roastery, to a reserve store. So what you see here, it is the first reserve store in India.
Okay, so we've done tea, we've done coffee. Now let's look at for FY26 and FY27, what should shareholders expect? Are you at a cusp of a strong operating leverage kicking in? Why? Because if you've acquired a lot of businesses, you've used your cash, you are rebuilding some of the franchises, will FY26 and 27 be the patch of real J curve for Tata Consumer? Because you will keep on expanding your margins, you will keep on growing. So more than top line, it is the bottom line which will suddenly start looking better.
So Nikunj, we've spent the last 4 or 5 years building out the muscles for a classic FMCG company. We built out a very strong R&D team. My innovation to sales ratio is best in class. We built out distribution. Now my numeric reach is about 4.5 million outlets. Direct reach is 1.8 million. And I've got, I would say, best in class digital now starting to kick in into the front line. And then we started to build brands. We were a commodity company, now we are getting to be a branded company. So we built the muscles. And the infrastructure that we built out, we are more or less there in terms of reaching where we want to reach. Now it's the wholesale multipliers which will kick in. Therefore, the costs on the middle of the P&L are not going to go as, in sync with the top line. So when I put my portfolio together, my growth business is 30% at 30% starting to kick in.
What is the margin for the growth business?
That is my overall gross margins, if I calculate, right? And my gross margins include variable freight. It's about 35 to 37. The growth businesses, which is Capital Foods, Soulful, are 50% more accretive.
50% right? More than the traditional business.
Correct.
That would include salt, spices, tea, coffee.
Correct. So, and my other businesses, which is Sampann and ready to drink, are about 10 to 15% lower. So all put together, it's slightly accretive, my total this thing compared to where I am, right? Now that margin, if I'm not adding costs on the middle of the P&L, all starts to flow down. So to your point, we've publicly said we will grow at double digits and my EBITDA will grow faster than the top line.
So I'm just going to construct this for our viewers. For FY26, the way forward, if I put this graphic out, it is that the new businesses will grow at a higher rate, which is higher margin business. Traditional business will grow, but the contribution will start coming down, and you will continue to invest in the 2-3 new categories which you just mentioned. So on a blended basis, for Tata Consumer, beyond FY25, we are looking at EBITDA margin expansion. That, I think, is story number 1.
Absolutely.
Story number 2, which everybody is trying to really put their heads around it, is that quick commerce mein kya ho raha hai? We are now getting more and more accustomed and addicted to quick commerce. As a percentage of your total sales, now nearly 8% is coming from quick commerce. That's the highest for any food company in India or the highest for any FMCG company in India. Was this a conscious strategy?
So, Nikunj, my strategy, I will be where the consumer is, right? If the consumer is digital first and online first and going on to quick commerce and e-commerce, e-commerce overall is 15% of my sales. I would think that is one of the higher in the FMCG space. And quick commerce is, like you said, 7.5, right? The reason is I don't want to be trying to tweak my margins by managing channels. I would go where the consumer is and then backwork everything. So we built the muscles for executing on quick commerce. We built the portfolio for executing on quick commerce. And now we are focused on making sure we delight the consumer whichever channel.
Okay. So is quick commerce more volume, less margin? Because if this becomes just 10% of your total sales, which it could, looking at the growth, could that really then force you go back to your EBITDA margin guidance? Because if you are selling more in quick commerce, it's a low margin business. And then it could aggregate your total impact on the margins.
So let me leave you with quick commerce is not necessarily low margin business. Okay. It depends on what you're selling and how you structure your portfolio. And here's the thing, right? I know that quick commerce will continue to grow, and therefore I have to figure out the rest of my cost to make sure my EBITDA margin continues to grow. I can guarantee you EBITDA margin is going to grow. We will play around with all the different moving parts to make sure we deliver those numbers.
There seems to be a visible slowdown in all FMCG categories. Is Jan looking better? Has February been better for you? Are we in for a revival in March?
So Nikunj, I think in my earnings call I said, I think we bottomed out in October, November, right?
That is for your tea category or all your categories?
All my businesses. I think overall we bottomed out. And the second chatter that you'll hear around is urban slowdown, right? Why was there an urban slowdown, right? If you look at food inflation, that hit what, 11% in Q3? 11, 9, 8, if I remember right, September, October, November. That pinches. Real estate ran up with stock market. So rents, that pinches. So overall, the consumer started to get squeezed. I do think if you look at the inflation, food inflation numbers are coming down, as is stock market, it is what it is. I think the real estate will start to cool down. So people are feeling more confident coming back. And the tax cuts and the recent budget has helped. So I think October, November onwards, we started to see the numbers come back. A. B, when you say urban slowdown, if I actually add back my e-commerce, which is urban, my modern trade, which is urban, my general trade grew about a 1.5 to a 2% in urban. But if I add this back, I'm close to double-digit growth. So I do think we have started to see a revival, and I do think you will see businesses with volume growth coming forward.
So can I say for the products you are in right now and the categories which you represent, the nominal GDP growth is the granted number for Tata Consumer?
No. So I mean GDP will 6, 7, depending on who's number 8 that you take. I will grow double digits.
No, nominal GDP. Nominal GDP would be inflation plus GDP. That's about 12, 13%.
Yeah.
So that's the growth which we look at because inflation
absolutely. Yeah.
So you are a play like a lot of other FMCG companies right now. If I'm looking at them, they are actually growing at less than India's real GDP. Tata Consumer, the whole premise is that it will grow at least in line with nominal GDP, plus minus 1%.
Yeah, hopefully ahead of
nominal GDP. Okay. For you personally, because any company has to benchmark itself both on relative and absolute. What is the relative comparison and what is the absolute growth? Which makes you happy? You would say, aaj chai pee ke maza aa gaya. Aaj to maza aa gaya.
So let me say, relatively, it is my ROC and EBITDA margins which are lowest. That is one thing which bugs us. And like I said, we keep a close eye on it. If I added back the tea inflation, we were at a 16 and a half.
But that's also 17. Not great.
It's at least I would say par for the course. Great should be about a 17. We should move up to about a 20. It will take time. And that's why we've guided for a 50 to 100 bips EBITDA expansion. If I come into that range, that's number one. Number two in the pecking order, right? This is, I remember chairman's this thing saying, when the FMCG listed companies are lined up, Tata doesn't feature. We've got to change that. I think we've changed that. We've come to the middle of the pack, right? In market cap overall, right? I would want to keep nudging higher and higher.
You know, every time we meet before our app, I will ask one question and then there's a long pause from you from that. And that question is Starbucks, IPO, buyout. And I always ask you this question and I always get a long pause from you. Will you change it this time?
No. So, Nikunj, I think whatever long term, it's for the board to decide and whole piece. My job is to make sure we deliver value out of Starbucks.
But is Starbucks slowing down?
Sorry?
Is Starbucks slowing down? Because that's the indication which we get.
So overall, it was slowing down. I do think I can see the curve starting to shift, right? Same-store sales growth was still slightly negative in the last quarter, but it is now starting to turn, right? It's starting to look better. Q3 was better than Q2. Q4 is looking better than Q3, right? And Nikunj, we're not focused on this quarter and next quarter. Starbucks, the opportunity in India is huge. We remain focused on the 1,000 stores by FY28, the commitment which we have made, right? And we will keep making these tweaks on the products that we offer, the capex that we put in, the designs in Starbucks, the Reserve store. We've opened the first store at the Metro in Andheri. We have an all-woman store. We have a differently abled set of people working in our store. So we remain focused. We're adapting food to Indian tastes and cultures, right? We've now got the classic menu in, right? We've got the pico size. The Indians like a smaller cup of coffee. We've got the pico size now. We remain focused on making sure we appeal to the Indian consumer and continue to build out stores.
So, Mr. D'Souza, what we have is perhaps an idea of a new product category, fortune cookies. And they say that the fortune cookies, when you crack them, there's always a question or perhaps there's always a message. Sunil D'Souza will pick up these fortune cookies randomly, hand them back to me so that he cannot cheat because I'm the one who will be asking the question. Mass market or premium? Where is Tata consumer betting big on?
I am betting on mass market and premium, and there is a reason for that, right? Mass market, which is my tea and salt, gives me the base foundation, and it helps me build scale and carry the costs of my entire structure. But I do need premium, because if I have to go up the margin, this thing, and deliver financial numbers, I need more premium products. It will be lower scale. It cannot carry the cost that tea and salt can carry.
Which is one everyday Tata consumer product you are now looking at premiumizing?
Tata Salt, we are a 40 share, and if you take the top 5 brands, we are about 55, right? Which means there is a long tail out there which you can still go after, number one. Number two is the consumer today is looking for value add. My value added portfolio grew 31% last quarter. While overall salt grew 7%, value added salts grew 31%, and that margin is at least, I would say, salt is about a 35 to 37 gross margin. These are about a 40 plus.
There you go. Which is one product category which you think in India will cease to exist?
I wouldn't say cease to exist, but you say overall, coffee is going to grow faster than tea, right? Sodium, lower sodium salts will grow faster than the base salt. Fat, salt, sugar, any category with this, unless it is indulgent, I think there is going to be slower growth in these categories compared to the other categories.
Who is one person who over the years has inspired you the most?
There's a bunch of them whom I keep in touch with even now. And I think the single biggest quality that they had, which I admire, is I call it the 6 feet to 60,000 feet, right? They could see big strategy, big picture, but get down to the ground and make sure execution is right. I think those are the people who really impressed me.
Well, Mr. D'Souza, it's just been such an engaging conversation, and we've really started with the past. We spoke about present, we talked about future, a little bit of, fortune was at play. But like they say that luck always favors the brave. And you've been very brave in terms of the acquisitions you've done. You've been very, proactive in terms of the categories you've been launched. The stock may be going up and down, but I think it's a market condition. Ultimately, what matters is earnings, commitment, and what value you're creating. So cheers to that, sir. And good luck to many more lovely quarters ahead. Always a pleasure to have you on ET Now.
Thank you very much for having me, Nikunj.
Mr. D'Souza, you know how coffee is made. He is a championator. I don't know. The challenge is you'll have to teach me how to make a coffee, how to make a Starbucks coffee. So how do I start?
You start with grinding the coffee in the first place.
Okay.
Right?
I put it here. This is called a grinder.
Yeah.
Okay.
You fill it up.
Okay. And then what do I do after this? I tap it twice.
Yeah. Tap it like this.
Tap it like this.
Yeah. And then insert it inside.
Okay. So I come here.
Yeah.
Am I doing a good job?
Yes.
Yeah. There you go. Okay. So the center one is which one? Okay.
There you are. So the coffee is coming out.
Okay.
You steam the milk, then your coffee is ready.
So this is a single shot cappuccino.
This is a double shot. You like Americano, right?
I like
you
Americano.
add hot water into this, then please come with me. You're done.
There you go.
Very simple.
That's simple.
Thank you.
And that's your coffee, sir.
Thank you. Thank you.
If you like this video, then like, share and subscribe to ET Now.